Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because nothing has changed even with all of the fear, volatility, and drama we've seen over the past few days. Global liquidity continues to trend higher week after week, and it's only a matter of time before Bitcoin joins the party. Now, global liquidity has been increasing because of the steep downtrend we've seen in the US dollar index, and we know the US dollar index tends to have an inverse correlation with risk assets, so it dropping this aggressively is quite bullish for Bitcoin and other risk assets. But what's really important is we just fell below this major pivot level that we've had marked out for months now, because the last two times the US dollar index broke below that area was November of 2022 and October of 2023. And those dates should be familiar to those of you that have been in the market for a while now. That was when Bitcoin marked its bear market bottom at November of 2022 when FTX was going under, and October 2023 was when we ended our 6 to 7 month 2023 reaccumulation period and started our next rally higher. Now, unfortunately, most investors ignore this and instead end up panic selling at the lows because of whatever the current narrative is and all of the fear and uncertainty being spread on social media. For example, in November of 2022, FTX was going under and everybody thought the asset class and industry was done for. In March of 2023, everybody was convinced the banking system was going to go under. In October of 2023, the SEC came after Coinbase and Binance, and we all thought this industry could be toast. In January of 2024, Grayscale was selling billions of dollars worth of Bitcoin when they got converted into an ETF, and everybody was convinced we had to go a lot lower. In August of 2024, everybody became a Japanese yen carry trade expert and said that it was going to crush markets in both traditional markets and Bitcoin. And here we are once again today, and I'm sure you all already know what the current fear narrative is without me even having to tell you, and that narrative is, of course, tariffs. Everybody is a tariff expert now. They're an expert as to what it's going to do to markets, to the economy, and they're saying that Bitcoin has to go a lot lower to 70K, even 60K because of tariffs and because of the correction we're seeing in the S&P 500. And this is exactly why we ignore the sentiment and narratives and instead focus on the data. We know that Bitcoin follows global liquidity with roughly a 75-day lag. When global liquidity bottomed in November of 2022, what do you know? Bitcoin starts rallying roughly 75 days later, but then Bitcoin topped in February of 2023. And what do you know? Bitcoin tops about 75 days later. Same thing in November of 2023, global liquidity bottoms, and then Bitcoin starts rallying 75 days later. Global liquidity tops in the beginning of 2024. Bitcoin tops roughly 75 days later, and that repeated over and over again. Even as recently as October of 2024, global liquidity peaked, and then 75 days later, we were taking profits above 100K, saying that global liquidity was flashing a major warning. But now that global liquidity has bottomed and we're about 10 to 15 days from where Bitcoin should start rallying, everybody is ignoring this because of tariff fear and because of prices going down. And we've watched this cycle play out over and over again, the same way we've watched the cyclicality of market sentiment play out over and over again. We keep seeing short-term holders panic selling during fear at the lows, and we see them piling in at the highs when all the narratives are positive and everybody is talking about strategic reserve and everybody thinks that a correction is impossible. And this is exactly why I called Monday's free weekly report like clockwork, because we've watched this play out over and over again this cycle, and right now we're just dealing with the latest fear narrative that's causing everybody to panic sell and call for lower prices. Now let's go ahead and clarify some of this fear and uncertainty. I know a lot of investors are concerned about what we're seeing from the Atlanta Fed GDP Now estimate, now calling for a 2.8% contraction in Q1. And if you look at this chart here, it looks absolutely terrifying. You would think we were going into a great financial crisis tomorrow. But when you actually take a look at how this is measured on the Atlanta Fed website, you can see that there's really only one category that's negative and pulling down the entire GDP estimate, and that is net exports, which is just exports minus imports. And if we know that markets are scared that Trump is going to be implementing tariffs in the very near future, it makes sense for them to be front running those tariffs by bringing up their imports quite significantly. But if we see a huge spike in imports while exports remain flat, you end up with a very negative net exports number. But this doesn't mean that consumer spending is down, or non-residential fixed investment or residential investment or government spending is down. It just means that we're seeing a huge spike in imports as businesses try to front run tariffs, and it doesn't necessarily mean that we're entering a recession tomorrow like this chart would have you believe. And these growth scares and corrections have been quite normal this cycle, especially when we see the S&P 500 and Bitcoin correcting together. I would be a lot more concerned if Bitcoin was just correcting out of nowhere on its own. We do have a major catalyst coming up for risk assets on Friday with the update to the unemployment rate. The expectation is 4.1%, which is only 0.1% above the previous reading. We really don't want to see this come in too far above expectations because that could spark some real recession fears. I don't think it'll miss to the downside because of all of the layoffs we're seeing to federal employees. So I think an upside miss is the biggest risk for risk assets here. Ideally, it stays around 4% even or comes in line at 4.1%, especially because we still have stubborn inflation. We don't really want to see huge weakening in the labor market. And the market is now pricing in 3 Fed rate cuts for 2025. So we'll see how that changes after we get an update to this unemployment rate data. But as of right now, 3 rate cuts is what we have priced in. I don't expect that to increase too much because we still have elevated inflation, but a weakening labor market could cause the Fed to price in rate cuts more aggressively. And just in case the unemployment rate print was not enough in terms of a catalyst and a reason for volatility on Friday, we also have the first ever White House crypto summit Friday, March 7th as well. So I expect a lot of volatility going into both of those events. We're expecting more commentary on the crypto reserve announcement that was made on Sunday, talking about the inclusion of Bitcoin, Ethereum, Solana, XRP, and Cardano. And of course, once that announcement was made, the markets rallied and everybody piled in with leverage. You can see that very clearly here on the weekly chart with the huge wick we ended up leaving to the downside going into Sunday's close. But after everybody piled in, we left the largest CME gap ever for Bitcoin because the traditional markets were closed. And what do you know, Monday morning, tariff news comes out, $1 billion gets liquidated, and we see a large correction in those same assets, and a lot of those leverage traders got absolutely destroyed. But I do believe that our low was set last week, and we should not go below 78,000 at this point. I do believe this green region should be the bottom. A fall back below 70K and back below the 50-week moving average would be very concerning to me in terms of the health and continuation of this cycle, especially because we also filled that CME gap we were talking about for months. And I know there's some people that say it has to completely fill to the dollar, but I think it getting filled 95% is definitely enough. And if anything, maybe we fill the rest of it in a future bear market where Bitcoin goes into a deeper correction that ends up trading below 78,000. But as of right now, in the short term, I do think that is a confirmed gap fill and we can move forward. And speaking of moving forward, I am concerned that this Friday's crypto summit could be a sell the news event because it still has to be approved by Congress, no matter what Trump ends up announcing at that summit. As for my personal opinion, I know this is unpopular because everybody wants the US government to pump their bags, but I do not think the US government should be buying any Bitcoin or Ethereum on the market. And I definitely don't think the US government should be buying any XRP, Solana, or Cardano. I think it could have a positive impact on price in the short term, but it would be terrible for the US and for this space in the long term if we need the US government to bail us out because there's nobody using these chains. But we'll see what happens over the next few weeks and react accordingly. And even if we don't end up getting the strategic reserve, we're still seeing amazing headlines in terms of deregulation and operating a business in this industry finally being legal in the US. We saw the SEC drop their lawsuit against Kraken. We're seeing US members of Congress getting ready to launch a bipartisan crypto caucus where they can discuss the future of digital assets and blockchain innovation. And this headline is normal now, but just 2 years ago, this would have sent the market skyrocketing because it was illegal to operate a business in this industry just 2 years ago. And we also have an SEC crypto task force to host a roundtable on crypto security status. So even if we don't get a strategic reserve, and even if everybody gets depressed because the US government isn't going to market buy their bags, I still think the deregulation trend we're seeing for this industry and the fact that we're actually finally going to get some regulatory clarity in the US is still quite bullish for this industry long term, even if the strategic reserve doesn't happen in the short term. But my base case remains unchanged. If we do see a huge rally from Bitcoin going into April and everybody is euphoric over a strategic reserve or some other hot narrative at the time, and we see altcoins taking off and we see extreme greed return to this market, I would expect that to be the end of the cycle based on the current data we have as of right now. But of course, we'll see what ends up happening because right now we're not seeing a lot of demand piling into this market in terms of ETF inflows. So if we do spend a much longer time consolidating and we don't put in those new highs by April, then I will adjust my thesis to one of these other two outcomes. As for my portfolio, no changes since last week's dip buying. Still quite happy with my holdings. If we do end up seeing a strategic reserve and this market goes crazy over the next few weeks, I expect Solana and Ethereum to outperform Bitcoin. If the cycle is over and it's only downhill from here, the profits we've locked in along the way that are in my cash position will greatly protect my portfolio from downside volatility, no matter how low these other assets go. But we'll have to wait and see how this actually plays out. For now, we're still seeing abysmal performance from Ethereum. We have Solana and Bitcoin roughly flat over the next 12 months after this correction. Solana's up only 14%, which is barely beating the S&P 500, and Bitcoin is up about 30%, which is still quite decent compared to the stock indices, but definitely nothing compared to what we were seeing late 2024 or earlier this year. But I'm still optimistic that the top is not in and we still have higher to go. Bitcoin is now back in its expensive region. We did get a brief dip into fair value, and it's nice to see that the market did step in and buy at those prices. Those large wicks to the downside are a good sign of demand, but at these prices, I'm not really interested in adding to my positions, and I'm happy holding on to what I already have. And speaking of holding on to what I already have, we continue to see terrible price action for Ethereum, now trading below its 200-week moving average. And really the only thing holding it up is the fact that Bitcoin is holding up and the strategic reserve narrative. So I will be paying very close attention to Ethereum's price action going into Friday, because that's really the main narrative it has going for it as of right now, because otherwise it looks very weak compared to Bitcoin and Solana, and even the Ethereum Bitcoin pair is trying to hold on for dear life. As for Solana, not looking that great either. I know there were some major unlocks this week that investors have been terrified of for months now, but I expect most of that to already be priced in, and I expect that most of these investors hedged their Solana tokens by shorting and protecting themselves from the downside. So I don't expect too much sell pressure to come out of these unlocks, and I still expect a bounce in Solana versus Bitcoin, and I plan to rotate some of my Solana and Ethereum into Bitcoin and cash over the next few weeks if we do see those new highs. As for traditional markets, pretty concerning that we've seen a lower low on the S&P 500, and this is why we've seen a lot of fear in Bitcoin. Getting a bounce here makes sense, but the real test will be whether or not we can reclaim the 20-week moving average. A rejection there could mean we're going to enter a deeper correction, but we really want to see a reclaim of that moving average if we're going to continue higher going into April. We haven't seen a lower high quite yet. As of right now, we have higher highs and lower lows, but we'll see how the market reacts to Friday's unemployment rate print and what that means for price, because we know we need a strong S&P 500 for Bitcoin to rally and be strong as well, because Bitcoin is further out on the risk curve. Our long-term thesis remains unchanged. We're still seeing huge deficits being run by the federal government. Maybe Doge will fix this one day, but as of right now, they're really not making a huge impact quite yet. And those deficits have been getting worse over previous years. And as long as we see that debt continue to increase, we expect that debt to eventually get monetized and increase the money supply, which should be bullish for our risk assets like the S&P 500 and Bitcoin. But anyway, let me know what you expect. Will global liquidity's correlation with Bitcoin play out once again, or will this time be different? I think it is going to repeat the same pattern, and sentiment is only further confirmation of my belief. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.